let's talk about the grace period, policy lapse, or policy surrender when it comes to life insurance. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. I teach people how to live and leave a lasting legacy through infinite banking using whole life insurance. So today let's talk about grace periods, policy surrender, and policy lapse. So for those of us that are implementing infinite banking or vetting the idea of implementing infinite banking, let's understand the product. So a whole life insurance policy, when properly designed, structured for the use of financing from mutual companies, has a level premium, guaranteed death benefit, guaranteed cash value, etc. All these different features, more of which you can learn at length, in depth, on all these very different aspects of these types of contracts, the language, the verbiage, the utility, the purpose and reason behind all of the aspects of how a policy can function and how it can be built in our EncycloMedia series. So I would encourage you to check this series out at length. If you find this video helpful, you'll probably find some others very helpful. But let's begin with the grace period. So in this contract, when I have a policy premium that I'm paying to be able to have this death benefit, have this cash value, stand to earn dividends from the company, have all the advantages of owning such a policy, if in the event I don't pay a scheduled policy premium, my policy will enter what's called a grace period. And typically that's going to mean you'll have 30 days to make that monthly premium payment or that annual premium payment out of pocket. So the grace period, and you would get a piece of mail about this, and life events can happen. And there are stories that we could share right here, of course, where such and such happened in someone's life, and maybe they could or could not take care of that right away. So you're going to enter a grace period if you're not paying policy premiums out of pocket. Now, if you have cash value built up in your policy, then there may be an automatic loan to make a premium payment. So that can be something that just automatically happens once your policy is in danger of entering that grace period and lapsing, which is the next thing that I want to discuss. But one more note right here actually on having a robust foundation of cash value remaining staged, built up, accumulating in a policy is a great thing for lots of reasons. So now, and I've done this, when I first started infinite banking, I've used a policy where I paid significant premiums to have a significant cash value to be able to conquer and recapture some significant debt in our lives, student loans, credit cards, the family car. Now, knowing what I know now, and I didn't do this in the beginning, I was making maximum premium payments. I was making maximum policy loans to be able to eradicate that bad debt as quickly as possible. Now, I would suggest that we temper that, even if that's our primary focus, not necessarily making maximum policy loans, even doing something as aggressive as a loan recapture, because remember the golden rule: he who has the gold makes the rules. So having some reserve capital, and also remember the Midlands Bank example from Nelson's book, and not having an appropriate balance between reserve capital, money in motion, etc. So one way, of course, to address a grace period or the danger of a policy lapsing is in your life just having a good threshold of reserve capital that you anticipate keeping in a policy, even if you're using it in a significant manner, but having some reserve amount of capital in the policy so that it is staged there as a contingency fund, as a war chest, as an emergency fund. Consider that the golden rule. He who has the gold makes the rules. Keep yourself in a strong financial position for the unknowns in life. Life is always going to present obstacles and opportunities. So being staged with capital for obstacles and opportunities is always great. And in that event that you unintentionally enter a grace period, but you have reserve capital in the policy, you're not max leveraged, then automatic loan payments may be able to cover premiums to that policy, which would be very helpful to help you weather whatever storm you may be going through. Now, when a policy lapses, that's when you've gone past that grace period. There's still been no contribution of premium, which is the only obligation that an owner has. When an owner pays a premium, all the risk is on the insurance company. The insurance company has to perform when it comes to guaranteeing that death benefit and cash value and paying dividends as they earn them, etc. Once a policy goes past grace and lapses, it may be the case. Do not count on this. It may be the case that the insurance company would mail an individual a letter, an offer of a special reinstatement. It may say something like, well, if you will pay the policy up to date, etc., etc., this policy can go back in force. You should not count on that, but just be aware that that can happen. Now, if a policy lapses, this is important. You need to know this. If a policy lapses and there's an outstanding loan balance in excess of the cost basis, meaning the total amount of premiums that you've paid, if you've paid a total amount of premiums, but you have an outstanding loan balance more than that, greater than that, then that will be considered a taxable event in the year that policy lapse occurs. Meaning if you had paid $100,000 of premium and you had an outstanding policy loan balance of $120,000, that $20,000 gain, that's what that's going to be treated as, that $20,000 gain is going to be a taxable event for you. So, of course, it's no one's intention to begin acquiring policies, funding policies, utilizing policies who are implementing infinite banking with the intent of ever stopping. We're always going to be using money. We're always going to be banking for the rest of our lives. It's just a question of, is that commercialized or privatized? Are we our own bankers? Have we privatized and control and profit over the banking function in our lives or not? Have we relegated that, abdicated that, and given up that profitability to someone else? Well, if this policy lapses and we have an outstanding policy loan balance in excess of our cost basis, that will be a taxable event. This is not tax advice. I'm not a tax advisor, but you need to understand how these policies and contracts work and what the implications are for how you use them or misuse them. And at the end of the day, these are private assets. You can always take your ball and go home, right? You can always quit. You can always surrender the policy. It's not to your advantage to surrender a policy. Almost always. There could be some reasons, but almost always it is not to, what was it in the first place? It was you offsetting risk. It was you getting risk off of yourself and putting it on the insurance company. So if you are surrendering that policy, you have assumed all of those risks again. And of course, then again, in the context of infinite banking, that means you have given up what it was that you have built and begun and reacquired for yourself. Now, I do have a particular episode. It's going to be the episode in this EncycloMedia series. I will put the link to the non-forfeiture options video that I've made in our EncycloMedia series, where I'm talking about different layers, different levels of contingency that you can initiate when you are in some financial obstacle, some financial tight space, some cash flow pinch, okay, so that you're aware of what all your options are so that you don't have to forfeit this ideal asset. So to be aware of all those options, check out that video link below. So it is always an option to surrender this policy. It is a private asset. It's something that you personally own and that you can give up at a point in time of your choosing. And let the record show that I myself am a purchaser of whole life insurance. Just saying. I'm just saying. I buy this stuff for me and mine. It is our number one place of putting capital. And I would encourage you to continue vetting this concept for yourself and continuing your education into what it means to implement infinite banking and why I believe that it is the absolute best way to live and leave a lasting legacy. So if you learned more about how to live and leave a lasting legacy, make sure to subscribe to our channel here.